Welcome everyone to 912 Financial Group's review of the 912 Playbook November edition, Trader Trend Suggestions, Market Expectations for November. And that's why selling naked calls via Trader Trend neutral suggestions is considered an aggressive trade. 150 years of evidence tells us that the market, not individual stocks necessarily, but the market, goes up, not straight up, obviously, but up. It is not a long-term investor strategy to short the market. You can buy the market with a broadsword, but you must short it with a scalpel. We are not the scalpel. As a twice-monthly published newsletter, we can't be, and frankly, don't want to be. We will cede that arena to others. That said, post-FOMC, post-jobs report, and an easing of fears of escalation in the Middle East, markets around the world have rallied sharply. Does that mean we are now on track to eclipse previous highs? Outside the seasonal component, it would be doubtful. Consumer credit continues to shrink. People are stuck in their homes because they can't give up their sub 4% mortgages to buy new homes with 8% mortgages. 5% of the workforce now holds 2 jobs just to make ends meet. $17 for a Big Mac combo meal, but it is what it is, and as of this writing, the intermediate trend has returned to the upside, and we are followers of trend. That said, just because we write it doesn't mean you have to do it. The investor trend suggestions remain the least stressful as we work towards the end of the year. The majority suggesting selling puts that strike 10% out of the money. While this strategy might not yield substantial gains, it offers a more secure position, with the worst case scenario being ownership at a greatly discounted price to where we were a couple of months ago. And given the recent headlines, we believe those levels would be an incredible gift. We're in the same range we've been in all year. That said, the trader trend suggestions are completely valid. We are just worried about a couple days of pullback after this big run and folks getting stopped out before the next leg up happens. We don't want that. The middle ground would be to just sell the puts and avoid the bull call spreads. As for bonds, TLT fell to levels not seen in almost 20 years. The mid-October featured investor trade suggestion was a no-brainer. It is, and remains, a literal generational opportunity in the fixed income space. In the commodities sector, metals seem to be holding their own. A lessening of tensions overseas could have ended the flight to safety, but Powell seems to have offset those worries. Oil, however, stands out as an exception, showing potential resilience regardless of headline. Even a lessening of tensions shouldn't diminish demand given current Strategic Petroleum Reserve SPR levels. To summarize, play it cool, don't chase, volatility has come down, but selling out of the money puts still feels like the least stressful way to go. And where did we end up? At the highs for the cycle, we're using the conditional entries to buy the pullback and letting the short puts breathe as the way to play it. We had some stops hit, but that's the game. Okay, let's move on to the trade suggestions. Let's start with the featured trade and maintenance suggestion 3M Corp. We had it as a bullish counter trend. MMM opened at 93.83, and the suggestion was to sell the November 89 put with a stop at 85.35, which you could have sold at 35 cents. It wasn't stopped. It could have been bought back at 5 cents for a profit of $30. Moving on to bond ETF trade and maintenance suggestions, iShares, iBox, High Yield Corporate Bond ETF, we had it as a bullish hold. HYG opened at 74.24, and the suggestion was to sell the November 74.5 put, which you could have sold at 54 cents with a stop at 73.90. Unfortunately, it was stopped for 70 cents on November 7th for a $16 loss. If you went the bull call spread with conditional entry route, you bought the November 74.5 call on November 6th at 40 cents. The November 75.5 call never reached our 15-cent minimum. Whether it's a naked unit or one used as part of a spread, we don't sell units for less than 15 cents. Unfortunately, we were stopped at 20 cents on November 7th with a loss of $20. iShares 20-year Treasury Bond ETF, we had it as a neutral. TLT opened at 87.07, and the suggestion was to sell the November 93 call with a stop at 92.52. It took until November 8th to get filled at our minimum premium of 15 cents. It wasn't stopped. It could have been bought back at 5 cents for a profit of $10. iShares, iBox, investment grade, corporate bond, ETF. We had it as a neutral. LQD opened at 101.73, and the suggestion was to sell the November 104 call, which you could have sold at 15 cents with a stop at 103.56. Fortunately, it could have been bought back at 5 cents for a profit of $10 before LQD rallied above our stop. Always bid 5 cents to get your short units back, whether they are simple short units or part of a spread. Now the International ETF Trade and Maintenance Suggestions, iShares, MSCI, EAFE ETF. We have it as a neutral. EFA opened at 69.56, and the suggestion was to sell the November 70 call, which you could have sold at 60 cents with a stop at 69.85. Unfortunately, it was stopped for 67 on November 14th on the gap open at 70.46 for a $7 loss. iShares MSCI Mexico Capped ETF, we had it as a bullish hold. EWW opened at 59.60, and the suggestion was to sell the November 60 put, which you could have sold at 105 with a stop at 58.76. Unfortunately, it was stopped for $1.50 on November 8th for a $45 loss. If you went the bull call spread with conditional entry route, you bought the November 60 call on November 6th at 75 cents. The November 65 call never reached our 15 cent minimum. Again, whether it's a naked unit or one used as part of a spread, we don't sell units for less than 15 cents. Unfortunately, we were stopped at 30 cents on November 8th with a loss of $45. iShares MSCI Brazil Capped ETF, we had it as a neutral. EWZ opened at 31.95, and the suggestion was to sell the November 31 put, which you could have sold at 20 cents with a stop at 30.82. It wasn't stopped. It could have been bought back at 5 cents for a profit of $23. We needed EWW to trade down to 31.36 for the conditional entry bull call spread, which it didn't do. So moving on to the commodity-based ETF trade and maintenance suggestions. Spider, Gold Shares, ETF, we had it a bullish hold. GLD opened at 184.14, and the suggestion was to sell the November 181.5 put, which you could have sold at 55 cents with a stop at 179.58. Unfortunately, it was stopped for $2.30 on November 10th for a $175 loss. If you went the bull call spread with conditional entry route, you bought the November 181.5, 187 bull call spread on November 8th for $1.41 and were stopped at 59 cents on November 10th with a loss of $82. iShares Silver Trust ETF, we had it as a neutral. SLV opened at 21.22, and the suggestion was to sell the November 21.5 call, which you could have sold at 29 cents with a stop at 21.25. Fortunately, it could have been bought back at 5 cents for a profit of $24 before SLV rallied above our stop. Again, always bid 5 cents to get your short units back, whether they are simple short units or part of a spread. Spider, S&P, Metals and Mining, ETF, we had it as a bullish hold. XME opened at 51.36, and the suggestion was to sell the November 51 put, which you could have sold at 65 cents with a stop at 50.87. Unfortunately, it was stopped for 90 cents on November 6th for a loss of $25. If you went the bull call spread with conditional entry route, you bought the November 53 bull call spread on November 6th for 80 cents and were stopped at 60 cents on November 6th with a loss of $20. Spider, S&P, Oil and Gas Exploration Reduction ETF, we had it as a bullish hold. XOP opened at 148.09, and the suggestion was to sell the November 147 put, which you could have sold at $2.36 with a stop at 142.88. Unfortunately, it was stopped for $5.10 on November 6th for a loss of $274. If you went the bull call spread With conditional entry route, you bought the November 147-155 bull call spread on November 6th for $2.50 and were stopped at $1 on November 6th with a loss of $150. Spider Energy Select Sector ETF, we had it as a neutral. XLE opened at 87.37, and the suggestion was to sell the November 87.5 call with a stop at 87.04. Unfortunately, because XLE opened above our stop, there was no execution. Power Shares, DB, Agriculture ETF, we had it as a bullish hold. DBA opened at 22.40, and the suggestion was to sell the November 21 put with a stop at 21.67. Unfortunately, it never hit our minimum amount of 15 cents, and there was no entry. We needed DBA to trade down to 21.84 for the conditional entry bull call spread, which it didn't do, so moving on to healthcare ETF trade and maintenance suggestions. Spider S&P Biotech ETF, we had it as a neutral. XBI opened at 71.77, and the suggestion was to sell the November 76 call, which you could have sold at 25 cents with a stop at 75.46. It wasn't stopped. It could have been bought back at 5 cents for a profit of $20. Next, real estate ETF trade and maintenance suggestions. Vanguard REIT ETF, we had it as a neutral. VNQ opened at 77.43, and the suggestion was to sell the November 79 call, which you could have sold at 55 cents with a stop at 78.74. Fortunately, it could have been bought back at 5 cents for a profit of $50 before VNQ rallied above our stop. Again, always bid 5 cents to get your short units back, whether they are simple short units or part of a spread. Spider S&P Home Builders ETF, we had it as a bullish hold. XHB opened at 77.14, and the suggestion was to sell the November 78 put, which you could have sold at 175 with a stop at 76.09. Unfortunately, it was stopped for 232 on November 9th for a loss of $57. If you went the bull call spread with conditional entry route, you bought the November 78 call on November 6th at $1.15. The November 84 call never reached our 15-cent minimum. Again, whether it's a naked unit or one used as part of a spread, we don't sell units for less than 15 cents. Unfortunately, we were stopped at 45 cents on November 9th for a loss of $70. Lastly, U.S. major market trade and maintenance suggestions. Spider S&P 500 ETF, we had it as a bullish hold. SPY opened at 435.47, and the suggestion was to sell the November 436 put, which you could have sold at 391 with a stop at 431.26. It wasn't stopped. It could have been bought back at 5 cents for a profit of $386. If you went the bull call spread with conditional entry route, you bought the November 436-453 bull call spread on November 6th for $409 and closed it at $14.79 on expiration Friday when SPY closed at $450.79 for a $1,070 profit. Remember, we are not looking to hold stock positions beyond the current cycle. Close all trade or trend positions by the close on expiration day. Power Shares QQQ ETF, we had it as a bullish hold. QQQ opened at 368.79, and the suggestion was to sell the November 363 put, which you could have sold at 253 with a stop at 358.69. It wasn't stopped. It could have been bought back at 5 cents for a profit of $248. We needed QQQ to trade down to 363.13 for the conditional entry bull call spread, which it didn't do, so moving on. And lastly, iShares Russell 2000 ETF, we had it as a neutral. IWM opened at 174.49, and the suggestion was to sell the November 179 call, which you could have sold at 115 with a stop at 178.22. Fortunately, it could have been bought back at 5 cents for a profit of $110 before IWM rallied above our stop. Another example why we always bid 5 cents to get your short units back, whether they are simple short units or part of a spread. And that's it. Net, there was a gain of $312 on the single unit side and a gain of $658 on the conditional spread side. A green edition will take it. If you are viewing this review and are still not sure about subscribing, request a free trial edition at general@912financialgroup.com. You'll get the latest edition. No worries, no credit card needed. Thanks for joining me, and as always, please like and subscribe.